Good afternoon, ladies and gentlemen, and welcome to the Personal Group Holdings PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and will publish those responses where it's appropriate to do so on the Investor Meet Company platform. Before we begin, I would just like to submit the following poll, which will appear on your screens now. And I would now like to hand you over to the management team from Personal Group Holdings. Paula, Sarah, good afternoon.
Thank you very much. Good afternoon, everybody. What better way to spend a Friday afternoon than to listen to us and our results, but we're very delighted to be here. I'm Paula Constant. I've been the Chief Exec of Personal Group for 7 months now. I'm looking forward to taking you through my findings from the first 6 to 7 months, a little bit about the reason that I joined Personal Group, and then particularly around the opportunities for us moving forward. But first, I think for anyone that doesn't know the group at all, here's a very straightforward slide to explain what we do. So essentially, we are about providing affordable benefits and services. It focuses across employee health, well-being and engagement. We've got over 1.6 million employees. And we have a number of services that we provide under that umbrella banner. So as you can see on the right-hand side, a huge part of our business, really the foundation of our business 40 years ago, is around insurance. We sell a number of affordable insurance policies to clients via a business engagement with an employer, and then we travel face to face to talk to their employees about a number of insurance options. And in the main, we do that in tandem with our benefits platform software, but we do also supply some insurance only propositions to clients as well, so we can be quite flexible. Our benefits platform, it really offers a range of discounts, vouchers, collaboration, reward and recognition, engagement tools, a fantastic well-being and health module, and a number of other benefits in that space as well. And that's evolved through the history of the company to a really compelling SaaS platform that we'll talk about later. We've got a pay and reward consultancy division, 2 consultancies that we've brought together over the course of last year, that play in a broad space and offer some real differentiation in terms of digital and independent pay and reward advice. And then we have a technology resale division as well, Let's Connect. So there's lots of elements to our business, but all delivering under that banner of employee well-being and support. So that's a little bit about the company, and Sarah, I think, will whiz through the finances in a couple of slides, just to pull out some of our key highlights. So over to you.
Thanks, Paula. Yes, I'm just going to start with the summary results. So we saw a very strong performance in the second half of the year, resulting in our EBITDA growing 35% year on year. In a second, I'm going to take you through the different revenue streams from the divisions that Paula's just spoken about. But broadly in year, we saw revenue growth across all of the areas outside of Let's Connect, which is that salary sacrifice division. And whilst revenue remains stable, what we've effectively done is replace some of the lower margin income that we get from Let's Connect with higher quality income from insurance and benefits. We've also, as a company, historically, we've paid out a large percentage of our profits as dividends, so around about the 80 to 85% mark. We announced a final dividend of 5.85p, in line with the interim dividend earlier in the year, taking us up to 11.7 pence for the full year, which is broadly 10% up year on year. And then as a business, again, we're in a very strong financial position. We're very cash generative. At the end of December, we had cash and deposits of just over 20 million and no debt, and obviously it puts us in a really good position for any investments that we want to make going forwards to aid our growth. And then just Just before I go through the segmental results, so just a quick reminder or introduction for those of you who haven't been on before around the various revenue streams from each of those divisions. So insurance, very straightforward in terms of premium income that we get into the insurance policies. The benefits platform, predominantly that's SaaS subscriptions, so digital platform subscriptions, either on an annual basis or a monthly basis from people using our benefits platform. But also alongside that, we also make some money from commissions from benefits that sit on that platform. So that can be the discounts, shopping vouchers and the like, that people can buy at a discounted rate. We obviously make a margin on that, or also some of the other employee benefits such as cycle to work or salary loans, where again, if the end employee takes one of those schemes out, we make some commission on that transaction. Just in terms of pay and reward, so the consultancy division, again, good percentage of that is straight consultancy income, but they also have some digital products to do with pay benchmarking, job evaluation type tools, but they also sell on a SaaS model, so annual subscriptions coming into play there. And then finally, the other own benefits, Let's Connect, is essentially a retail sale. So we will make a retail sale of a laptop or something to the employer, get a retail margin essentially on that sale, and then the end user, the end employee, will then have a separate salary sacrifice arrangement with their employer. That's just a brief overview of the different revenue streams. So just looking at the performance in year, so you can see the breakdown by those 4 key areas. In terms of insurance, we had a record year for new insurance sales, which was fantastic, 11.8 million. And alongside really strong retention rates, year-on-year retention rates, in particular for our existing policyholders, we saw the size of the insurance book increase to 31.6 million, so 13% growth since the end of the previous year. And the majority of those policies are on weekly or monthly rolling contracts, and we collect the premiums through payroll deduction, or the employers make payroll deductions and pass those premiums on to us. So a very sort of steady and reliable income flow. And then in terms of the contribution from insurance, the loss ratio on the insurance book remained stable at 27%. And then we also saw in our insurance expenses relatively stable. We've got the field sales team up to the level that we need to get it at now. So an increased margin coming through from insurance with EBITDA up 24%. Moving on to the benefits platform. So this is a combination of our Happy platform that we sell to enterprise clients and our SME distribution channel that we use Sage to sell Sage employee benefits. So again, the annual recurring revenue there up to 6.1 million at the end of the year. Relatively equal growth seen across the Happy and the SME solutions. And then revenue in year up slightly more than that growth because of the commissions that I spoke about a second ago that come through the platform. We've seen more of those coming through in 2023. In terms of EBITDA margin, up 34%. And again, obviously, any scale we can get onto that benefits platform, there's obviously an element of fixed costs associated with it. So the more we can grow the top line, the better the margin should be over time. Pay and reward, so the consultancy division probably didn't have quite the year we were hoping it would have. You may have seen a separate RNS that came out at the same time as our results around a new contract win with a major airline. That's the biggest contract win that division has ever had. It basically was slightly later than we were anticipating. So in year 2023, not quite as good as we were hoping, but obviously set them off on a very good footing for 2024. And then other own benefits, so Let's Connect. So any of you that have been on our presentations before will know that this time last year, we spoke about Let's Connect losing their sort of major clients. So that business has significantly downsized during the year, resulting in a sort of 33% decrease in their revenue. I think in terms of profit, it probably hit the numbers we were expecting it to hit. Obviously, with the loss of that major client, we did operationally downsize that area to make it as efficient as possible. And then just in terms of some of the other areas on there, in terms of other, so really the increase there is because of the increased interest rates. So the cash and deposits that we hold for the insurance subsidiaries obviously benefited from increased interest rates during the year. And in terms of group admin and central costs, we have seen an increase year on year. No one thing individually coming into play there. I think probably we spoke this time last year about an element of failed acquisition costs coming into play. We've obviously had a change of CEO during the year, which has resulted in sort of one-off additional costs. and then generally inflationary costs around salaries, insurances, our own group insurances and the like, all sort of individually contributing to the increase there. But just before I leave this slide, probably just to highlight the red box on the left-hand table, and that 38.3 million sort of culmination of all the recurring type revenues that we have across the business. Obviously at 38.3 million at the end of the year, and at the start of 2024, is giving us really good visibility of the income we've already got in the bag, I guess, or banked, that we can get good visibility of our results coming into 2024. So that's probably the summary for me. I mean, just to pull out the highlights, really, we've seen that underlying growth continue, and the recurring revenue streams are up significantly across both the insurance and the SaaS subscriptions. The insurance contribution is continuing to strengthen and push up our EBITDA number, and we're in a very strong financial position for investment and future growth. So I will now hand it to Paula to talk through some more of the strategy.
Thank you. So the first slide was one that I took to investors when I first met them in September, a couple of months in. I think it's just coming. And one of the questions that was on people's minds was, what's great about the business and what did you like through interview, and has that proved true when you finally arrived in the business? So the good news is it has proved true, and it continues to prove true. I don't know if it's showing through on people's screens, but hopefully we'll get there. We will get there. There we go. There are many great things about the business, but the things that struck me when I was looking at the business through interview were a super strong insurance business. And as you can see from the results, we have a very high level of year-on-year retention. We're happy with the steadying claims churn rates. And last year we hit our best ever month, day, week, hour, every possible permutation that you could think of, which is really good news, but also gives us a lot of hope and ambition moving into this year that we can do more. And we possibly did that on the background of some good analytical data, but not the kind of level of data that I would expect to be working with in a business, given my heartland of various kind of operational and COO jobs coming up through particularly my telco days and particularly my time at BT and Openreach. So we've now built a big suite of data that we are exploring at pace, and it tells us a lot about the field force, which I will answer on the next slide, and hopefully weave in some of the questions that are coming through. There's a good question there about that dimension in the field force. I'll touch on them. Probably the best thing though about the business, I mean, it's great that it's repeatable revenue, repeatable custom, and it's fantastic that we've made the progress that we've made with a lot of hard work, and great that we've got more insight to do more. But our clients and customers are consistently saying, this is affordable, dependable insurance. It really reaches a sector of the organisation where insurance really matters, and insurance isn't necessarily available and presented to them via employer schemes. So we're very confident that it addresses an important need in society. So very happy that we have a strong insurance business and we continue to grow at pace. Secondly, I was very excited about running another SaaS platform, that we own and build in-house. I've run a number now over the course of my career, and this is a great piece of engagement software. We're very proud of what we've delivered now with the upgrade to Happy 2 from Happy 1. When I met investors in September, we had gone live internally with our new platform, and we were just laying the groundwork to accelerate through migration, which is great now to say that we've migrated over 600 plus of our Sage clients. It will actually be double that number by the end of the day, but I didn't manage to get that number in time for the presentation. And we've got over 200 clients, new clients, predominantly Sage clients, and some of our Happy clients live as well. So, it's been great to go live with no customer pain. So very happy with the progress so far. I'm looking forward to accelerating the rest of the migration through the course of the year, so that we can get on to the next stage of our strategy. It's good that we've won our first of what I hope is many technology business awards for our solution, and I think the research that I'll just share in the next few slides show that we really have something that's highly applicable to SME and enterprise, not just as a complete offering with insurance to bigger enterprise players, but also really strong contender in the SME space. So we're very happy with the direction that we are going in with Happy, and more to do as there is with anything. And then finally, the Sage partnership. We are over 4,000 clients now onboarded, and that gives us access to about 60,000 employees. It's a brilliant proof point for us that we've got access to the SME market at scale, as well as a proof point to other partnerships that don't play in the same space as Sage and aren't of the same scale. We're very proud of our Sage relationship, and we're looking forward to completing the migration and then looking at the opportunities going forward. So that gives you a sense about the kind of key things that I thought could be great opportunities for growth in the business and are proving to be so. Okay, moving on to our next slide. So 6 or 7 months in, what have I been focusing on? These are the 3 areas that we certainly talk about very broadly in the business as the 3 priorities for us to really press into and fix. So firstly, on strategy, it's clear to me from our employees and from our shareholding base that we now need to look at what is the big opportunity for the business. We're very stable, we're very dependable, we're very predictable. Where could we get to in the next 3 to 5 years' time? So I'm busy gathering data and insights to answer that question. Sarah and I have just completed a really thorough market segmentation exercise across benefits and insurance. So we've started there clearly because they're big areas of the business, and particularly because we haven't invested in insurance activity other than organic growth of face-to-face in the last few years. So clearly the questions are, what more of the market is there to go at, and what more could you do in insurance? And then the same questions for benefits. So we'll be working through the rest of the business strategy and course through the year. On the sales side, there's been lots of forensic work around both B2B and B2C. So, B2B are the conversations that we would have with employers, predominantly HR directors and other senior members of businesses, for benefits and insurance, as well as, separate conversations for Pay and Reward and Let's Connect. But we've been really focusing on the benefits and insurance B2B journey. So we've got a huge deal of segmentation now across every channel. We're very clear about the channels that we should be using, that will have the maximum impact for benefits and for insurance, and lots more metrics about our lead to opportunity, our opportunity to conversion. So I think the groundwork on the numbers is done, and now we can be very focused and targeted. On insurance and more of the B2C conversation, we've got a huge suite of data now, which looks at the portion of time that we spend on various activities and really helps us to help our employees, to optimize conversations around both benefits and insurance. So as you can imagine, there will be conversations around customer care and other elements that we can direct to different parts of the business, and just ways to try and reduce unnecessary activity or unnecessary travel, and make the experience brilliant for employees as well as for customers. So lots of opportunity to go out there, lots of opportunity to look at the kind of presentation level, the kind of conversion level at every stage of our organisation. So what do we expect from people coming in at the beginning, and what do we expect from people that have got experience? And we've also cut that information by sector as well, so it's very clear to us to see what level of competence serves what level of sector, etc. So we are surrounded by data in the moment, and regularly, that will help us make some really good decisions going forward. We have just under 50 face-to-face sales executives. That number has kind of varied between, low 40s to high 40s, I think, over a number of years. With an organisation of that size, you can clearly understand the individuals in the business that we would also, as well as going out on the road, see, quarterly in a quarterly business review, as well as other business events. So, coming from an operations background, I've taken, quite a bit of time to go out with different people in different areas and really understand, the path of a day in the business and how the conversations progress. And I've been really pleased with what I've seen, but clearly there's more we can do around processes and technology and etc., as well as coaching and other techniques. So I think, as always with any operation, there's always more to do, and it's been great to see our operation engaging so proactively with, a slightly new approach and a new set of data, and a new chief operating officer that came in at the beginning of January, primarily his focus on all of those things. And then, lots of analysis around how we onboard customers for Sage. We've got numerous different routes of customers onboarding. Once they've had the initial conversation, some on board through digital channels, some on board through welcome calls. So it's just been really good to understand the right approach for the right size of business. And lots more to do in all of those spaces, as there always is in any business. And then finally, on simplification, I've talked about my new Chief Operating Officer. I have a number of other new people around my table, and some, moves of my existing leadership and some moves out. And, we're now just thinking about any other roles and capability that we need to plug in the business going forward. But particularly really now about where have we got rework, where can we remove work, where can we make lives simpler for everybody. And then it may sound quite straightforward, but a set of financial and operational objectives that cascade from top to bottom always helps people drive in the right direction. So lots of activity and lots of energy, operating at a lot of pace, with some pleasing results coming through. Okay, on to the next slide. There's 3 slides now, and then that's the kind of the end of the presentation. And these are probably quite information heavy. So, but please try and ping some, questions as we go through. And I'm trying to read QA in parallel, with some help from Sarah. So I think I've probably answered bits of your questions, Ed, but I will come back and answer more as we go through. The questions we were trying to answer on the analysis that we did on the benefits platform were, where and why do we need a benefits platform in a conversation where we've got an opportunity with insurance? And then also, where does the benefits platform play in its own right? And the findings were really pleasing. So to summarise a 200 slide pack in one simple slide for you in 5 minutes. Essentially, we're very pleased that we've got a very strong offer, particularly for SME and mid-enterprise. So it's clear, that we will continue to play in those areas and be very specific about our focus. We set up a number of online interviews for SMEs, and then engaged the same company that set up the online interviews to conduct face-to-face interviews with a number of bigger enterprise customers that either used our services or used competitor services. So, we were happy to see that over 50% of SMEs strongly recognised and or used the Sage employee benefits, which is obviously our product, and super positive feedback about the features and functionality and the use in the business. But there was equally as strong recognition, although to a lesser percentage across SMEs and enterprises, of the Happy brand in its own right, alongside competitor brands. So that was very pleasing for us. A number of the other questions also addressed the features and functionality. So asked, what's great about Happy, what's great about competitor products, and it was good to see that our reward and recognition capability, our strong account management, and of course what we've now built in Happy, which is extremely strong, app user experience, were very, very favourable. So we're very clear how we can win in the market, but also against specific competitors, which is super helpful. So I think we've got a strong proposition. Secondly, there's plenty to go at. 50% of SME customers have no proposition or cobbled together potentially technology, potentially not technology solutions. So there's some white space there that we should be very well positioned with our success with Sage. And, there's some clear segments that will appeal to us, particularly where there's an insurance opportunity as well. And then I think finally, clients are sticky. 90% of SME customers say that once they've bought a platform, they're not that willing to change. It's an expensive transition to change. It's a lesser percentage for enterprises, but it's still quite high, 50 to 70%. So, we're clearly looking at opportunities to increase stickiness for our base, but also to be relevant for competitor bases where we are more likely, to gain from providing our services than, potentially going head to head to win a customer from a competitor. So I think, and that's not an unknown feature, I think, in the marketplace, and there will be other competitors that have come to the same conclusion as us on that. So, there's always opportunity for us with the real individual characteristics of what we have in insurance to be useful to other benefit platform providers as well, especially in sectors where we wouldn't typically play. Moving on to the insurance slides, and then I'll just come back and try and address any questions. So 2 questions that we tried to answer in insurance. The first was, is there headroom to play in the same way that we're doing today with face-to-face insurance? And the answer to that, quite simply on this slide, is yes, there is. There are 10 million employees that receive either no sick pay or partial sick pay. The policies that we provide today broadly fit in that sick pay category. Within the category of those that don't receive or receive very little sick pay, we are prevalent today in 12% of enterprises, of companies supporting them. And within those customers, we typically have around an average of 12% penetration. It does vary by client. So, there's clearly some headroom. It doesn't mean that the headroom is the entirety of the, 1 minus 12% of 12%. But there are many sectors and many other, roads to further penetration within the clients that we have that we can explore. So we just need to be very focused about what we do first. Secondly, I think the middle column, really gives good confirmation that when we approach new customers, they're very keen to see employee benefits and insurance, sold together. And they're very keen to see, the use of one-to-one and face-to-face as a differentiator. So, they like the fact that, we put a whole benefits proposition together with insurance. They like the fact that, we're, very unique in having one-to-one face-to-face contact. And I think the other really strong thing is that against a sea of brands, including really big high street insurance names, the recognition of Personal Group, was as high as 1 in 4 people, which was, very reassuring to us that we have a well-established, strong brand. So that was very compelling. And then finally, of all the sectors to go after, transport, production, logistics still remain large sectors. That's our heartland, really, of where we are present with benefits and insurance. Health and retail are huge sectors, and there will be specific parts of that sector that we want to play in further. So, examples of customers that have got the ability to send a face-to-face, engagement executive to a venue with lots of employees there. Typically we would be looking for something around 500 to 1,000 employees in one place plus to make sense of the economics. So I think we've got some real key focuses there. And again, construction less relevant for face-to-face insurance, but clearly a dominant sector that we could provide digital insurance to, and a dominant sector of the Sage base of customers that we serve as well. So lots of opportunity to play more in the areas that we're in, and to broaden some of our sector coverage. And then finally, the questions that we asked clients were, are you looking to broaden your benefits options with insurance and or other elements? And if it's insurance, what are the things you're considering? So across SMEs and enterprises, there was a large majority of 80 plus customers that would want to offer broader insurance solutions. Certainly there is definite pressure on employers to now self-fund options that obviously we provide as employee funded. So that's a big advantage to us, because we'll still be very relevant across that blue collar space, but it makes sense for us to explore how we can offer parallel services on the employer side. So that's going to be a key area that we're going to explore going forward. We broadly looked at 3 buckets of insurance, so income protection, personal insurance, and health benefits, each of which have got various growth potential. Clearly, the big opportunity for us is health benefits, both preventative and treatment options where there's high growth. There are many options to explore, and these are some of the options on the right-hand side. Low-cost treatment cash plans would offer good adjacencies to what we do today. Low-cost PMI, larger cash plan options should also be considered. We would look at a partner to build and a buy strategy, and potentially then partner with other options that might not be right for building. So I think all options are open to us. The key is to work really at pace now to understand what's the right building block so that we can expand our portfolio potentially across employer and employee funded health and wellbeing benefits, but particularly insurances. And there are probably many other options to consider, and that's our challenge, as I've said, to press at that through pace through this year. So I think just to conclude, and then I think I'll just see if I can weave anything else from the questions in. You can see that we're very proud of the strong repeatable business that we deliver. It's fantastic to run a company with 80% plus repeatable revenue, and a strong trend of that in the past and to come. We are clearly playing in the right segments today, but there's also a large addressable target market. And there are clear options for strategic growth to maximise shareholder value. So hopefully that gives you a good flavour of where I've been over the last 6 months, what I'm excited about and still remain excited about, and some really quite huge and exciting opportunities for us strategically going forward. The key is for us to really focus on what's going to turn the dial without doing too much. I think I've probably answered most of the questions on the operational side of the field force and insurance, and I thought these were a great set of questions, Ed. If I come back to the consumer duty elements at the end, I think I mean, Sarah and I are very hands-on in the business, and obviously, as you can see, with a suite of numbers, we regularly meet, as I've said, new hires, go out in the field, encourage the rest of the organisation to go out in the field, meet people at the quarterly reviews, meet people at our annual reviews as well. So, we're a small business. We're 250-ish employees. So, from that sense, it's quite straightforward. On consumer duty, it's something that we're obviously, hugely conscious of and aware of and acting on. We've obviously increased the level of governance over the last year. In fact, probably 18 months ago, we really looked at the remuneration of our employees in the field force, brought in a even more robust set of measures that we already have, regularly look at compliance, regularly surface, recordings for the board to listen to, as we did only a few weeks ago. So, it's front of mind, not just with the business that we run today, but also in terms of anything that we progress in the future. Be that buy, build partner, it has to be a core focus for us. We are developing, a number of options just for our existing product portfolio that customers have, talked about and our field force have raised, to look at how we kind of enhance policies to provide, more benefit. And then, there'll be a number of options that we continue to look at as we build a plan around affordable insurance. I don't know if you want to talk a bit more about that, or unless I've said enough.
Yeah, I mean, I think, from the consumer duty element, we are serving a market that's sort of probably underserved from an income protection perspective, and the way that we sell face to face is probably one of the only ways that we can actually get that audience and for them to have access to those insurance types. So it does come at a cost, which obviously in turn means that our loss ratio has to be slightly lower for us to be profitable overall. But I think also, the FCA isn't directly going to be setting prices. The other piece to bear in mind is that the premiums are very low. So, I mean, our typical policy, for £50 a night cover is probably the cost of a cup of coffee a week. So they are very low value, low premium products, which can still pay out significant benefits. If somebody were to go into hospital for a period of 3 months, can get paid out in the thousands of pounds. I can probably just answer the other one actually quickly on the Sage, because the Sage, I think we announced in February 22, but it was a 5-year contract with them.
I think, yeah. Oh,
Probably told most of the others.
Yeah, I mean, I think there's a question about, excitement about the opportunity ahead. I mean, clearly, I hope this explains that there's more ground to go at in the benefit space. There's certainly lots of different avenues that we can go down, all additive in the insurance space, and probably the feedback from our investors has been, even with those 2 dimensions alone, there's a lot of things that you're talking about. So, let's see that really fine-tuned, palette of options now going forward for the rest of the year, which we'd hope to share back to investors in due course. I'll just check if there are any more. Opportunity for wider insurance sales, travel, house insurance. I think our conclusion from the work that we've done is neither SMEs nor enterprises put personal insurance high up on their agenda, and obviously we would want to exercise a level of of caution, particularly around consumer duty, about the areas that we went into. So we'll certainly be surfacing personal insurance offers by partners on our platform, but it's unlikely to be an area that we move into, from a buy build perspective.
Yeah, the last couple I guess there's one there on onboarding a new insurance client. I think it depends, is the reality, depending on what kind of organisation the field sales team are going into. But on average, we expect our policies to last around 5 years, and it's probably broadly around the year mark before we get the sort of payback on having sent somebody out there face to face, not just the cost of their sort of salary and commission, but their cars and all the infrastructure that goes with it. So that's broadly that one. And in terms of success rate, I mean, we sort of, we have various levels of presentations that take place. So the individual sales guys will go out and sit down with an individual employee to talk them through their benefits platform. I think broadly about half the people they will go out have available to them will sit down and talk about the benefits platform, and half again will sit down about insurance, and around half of those will actually then probably buy on the day.
You stole my stats. That's all right. You can answer the question. We're fighting over question answering here. Okay. Any more questions?
Paula, Sarah, if I may just jump back in there at this point, and thank you very much indeed for your presentation this afternoon, and also for being so generous of your time then addressing every single question that came in from investors. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended, just for you to review, to then add any additional responses, of course, where it's appropriate to do so, and we'll publish all those responses out on the platform. But Paula, perhaps before really just looking to redirect those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that'd be great.
Okay, I mean, I think I've probably already stolen my own thunder. So, hugely excited with the opportunity ahead. Brilliant, strong, repeatable business. Super growth in the last year. We're excited about the trajectory this year, and lots of options to crystallise and focus on to deliver more. So, thank you very much.
Perfect, Paula, that's great. And thank you once again for updating investors this afternoon. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Personal Group Holdings PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.
Thank you.
Bye.